Welcome everyone to another edition of Endgame Finance. Today we have some exciting news. Rivian has actually released their financials for the full year. They've also offered guidance for next year and for 2024. So here are some highlights from the release report. Rivian is now expecting a max spec launch in the second half of 2023. That basically means they will have a vehicle that does over or at 400 miles per charge, which is very significant. It basically brings their vehicles on par with gas cars that have a gasoline tank which fills up to 300 and 400 miles. So these guys are finally on par with gas cars. Announced that they've produced over 25,000 vehicles since start of the production. This is very significant because this is still a startup. This is a fairly new company. So producing 25,000 vehicles plus is a major milestone for these guys, and it's very exciting. Their quarter-over-quarter production has increased 36%. They delivered over 10,000 vehicles in the last quarter alone. So out of those 25,000 vehicles that were made from the start of production, 10,000, almost half of those were produced in only 3 months previous. And Rivian also expects to produce 50,000 units this year. Now that is a lot lower than I was expecting. I was hoping for around 75,000 units, but I actually went through this earning report and it makes sense for them to do only 50,000 units because they're putting in their own parts, they're putting in their own electric motors, and they're just reducing costs as much as possible. They had to slow the line production for delivery vans in the first quarter because they're actually putting their electric motor into their vehicles, which is reducing their cost basis for production of each unit. So they're basically ramping up with their own parts, and that's basically what's lagging the production in 2023. So this year they will do 50,000 units. They actually might do more than 50,000. According to the release they have in late 2022, they started on their second manufacturing shift, and that shift has not ramped up yet. So once that shift ramps up in second half or second quarter of 2023, they say they look forward to second shift continuing to grow its contribution to overall production. So second shift is still not at maximum capacity. We can expect this to happen probably in the second half of 2023, where production ramps up even more. And I think they should be able to beat the 50,000 unit projection. But like I said, they want to integrate their own in-house motor, their in-house technologies, because they have to keep reducing costs, as we'll see later in this video. This section, cost efficiency, in the letter, in the shareholder letter, the company actually specifically says they have to keep reducing costs. And the main issue for Rivian regarding their costs is basically that many of their material cost supplies contracts were established in 2018 and 2019. That's right before inflation really took off and really hurt their prices. They were unable to move the price a lot because they were upsetting their existing reservation holders. But they had to keep increasing the price of the trucks because the material costs in the last 3 years have gone up astronomically. In here, Rivian does say they had very limited negotiating leverage to begin their production because they were a fairly new company, and a lot of manufacturing businesses were not sure if they're gonna be sticking around, if they're not gonna be sticking around, if they should allocate materials for these guys because they might actually go bankrupt, which is still a high possibility with Rivian. But these results are actually showing material improvement in the overall business. The portion about customer experience is no surprise. Rivian has been named Best Ownership Experience among premium battery EVs by J.D. Power and Associate. Consumer Report Satisfaction Survey for Rivian was rated among the highest across all categories, with Rivian R1T being the highest rated truck. So customers cannot wait to get their hands on this vehicle. So in the section about future platforms and technologies, Rivian says the delivery of the 400-mile R1 Max Spec variants will begin in 2023. The Max Spec will launch with dual motor configuration, leveraging their own in-house design and manufactured drive units. So a lot more parts that are actually being designed and produced by Rivian will go into their trucks pretty soon, and this will reduce the need to be dependent on third-party suppliers, which they still say are costing them a lot of money just because they're not able to get all those parts from suppliers to ramp up their production. Rivian also says they will implement a new battery based on LFP cell chemistry. So they're basically just diversifying their production of battery, production and deliveries. So we mentioned this a bit earlier, but Rivian produced 10,020 vehicles in the last quarter. That's nearly That's almost half of their total production since the start of the company. So you can see they're quickly ramping up. They still expect the supply challenges to persist in 2023, but now they have much better predictability relative to what was experienced last year. So they're saying the supply chains won't be as constrained, but they still will be. But just the experience and just the expertise they've gained over the last year will help them tremendously to overcome the supply bottlenecks in 2023 and onwards. Total revenue for fourth quarter was $663 million, and that was on delivery of 8,000 vehicles. So they don't record the revenue until the vehicle is actually in customers' hands, in the customer's possession. For 2022, their total revenue was $1.6 billion. And that was on 20,000 vehicles delivered. So if we extrapolate a little bit, we can see they'll probably do around over $4 billion this year, but they will still not make any money on any of that revenue. Another very interesting tidbit from the revenue section of their shareholder investor letter, they forecast reaching positive gross profit, like we said, in 2024. And therefore, by the end of 2024, they will no longer have material inventory charges and loss on firm purchase commitments. So basically they're saying that the trucks they priced very cheaply in 2018, 2019 are costing them a lot. They cost them lose a lot of money because they underpriced these products because inflation was not raging on at the time as it is now. So the material costs were not as high as they are now. But by the end of 2024, Rivian expects that what they sell, they will sell at an actual price that actually makes them money. The net loss for the last quarter of the last year was 1.7 million. That's compared to 1.7 billion. That's compared to 2.4 billion in the same period last year. In the same period last year, they didn't produce almost any cars and they lost 2.4 billion. But that was mostly due to ramping up their factory. They're ramping up their production, adjusting their factory, getting the robots in and everything. And lastly, we have some future guidance. So guidance is adjusted earnings before income, taxes, depreciation, amortization will be $4.3 billion. So they will lose $4.3 billion. On top of that, they will also lose, well, they'll not lose, they will invest another $2 billion into their Atlanta, Georgia factory, which will ramp up production there as well. It will be producing a lot cheaper model, and they're hoping to have everything in place before this starts. So ramping up R1T platform was very useful for them because they learned a lot of manufacturing knickknacks. They worked out a lot of details. So once they ramp up the production of the cheaper model, it will go a lot smoother and it will not drain them, it will not cause them to lose as much revenue as R1T did, just because of those inflation headwinds that we mentioned earlier. Lastly, here we see introduction of new engineering designs and changes and technologies will take effect during the second half of 2023. So like I mentioned, the first half of this year will be mostly to ramp up production of their own parts, which will go in their own vehicles. So the production lines will be a little bit slower for vehicles, but the production line for their parts, for their electric motors, will ramp up quickly, and they will start putting these parts in pretty much, if not all of their vehicles, in the second half of this year, which will start to move them towards some profitability by the end of 2024, or at least at some point in 2025. But that's it, guys. Rivian's reported reports. It wasn't a great result. It wasn't a terrible result. It was pretty much mixed. And let me know what you guys think about these earning results. If you have any questions or comments, just let me know below. And guys, as always, thanks for watching and have a great day.